Hello. Thanks so much for taking time to join me today. My name is Jennifer Swain, and I am a financial literacy trainer at Access Credit Union. Access Credit Union implemented a financial literacy program in 2017 called Each One Teach One. This program was created by Van City Credit Union in 2008 and is an award winning program that offers workshops to educate members of the community on basic financial skills. I would like to assure you that there is no selling of any products or services during our presentations. At Access Credit Union, we currently have 21 staff members trained to facilitate our workshops, and I'm very happy to be bringing our credit history workshop to you today. Today, we are going to discuss why your credit history is important, what is included in your credit history, simple steps to help build or improve your credit score, and what to do if you find yourself in financial trouble. So, what is credit history? Your credit history is like your financial resume or a collection of financial information about you. It gives us a snapshot of how you deal with money that you borrow, whether that is a loan to go to school, a line of credit for emergencies, a credit card, or all of the above. Your credit history is important because it helps lenders decide whether you are credit worthy. That is, whether they can lend you money and expect that you will repay it. Typically, creditors use a credit report to assess your credit history. The main takeaways from your credit report are how you pay your bills and repay loans, how many credit cards you have and their balance, how much credit you have available, if you have filed for bankruptcy, how many times you have been late with payments, and what your monthly debts are. So basically, it reports everything about how you use credit. If your credit history is excellent, you will both be more likely to qualify for a higher loan and pay a lower interest rate on money borrowed. However, financial institutions are not the only ones who look at your credit history. We will look at more examples in a few minutes. Now, we are going to take a deeper dive into what exactly can be found on your credit report. There are two credit bureau agencies in Canada, Equifax and TransUnion. While their reports will look different, the information included will be relatively similar. The first thing that is found in your credit report is your identifying information. This includes your name and any aliases. Aliases meaning things like your maiden name or other names that you may go by, your date of birth, current and previous addresses, social insurance number, current and previous employers, and the date your file was opened. This information exists to help distinguish you from other borrowers and to help prevent identity theft. Mistakes can happen though, so when you request your credit report, which we will talk about at the end of the presentation, you want to make sure you review this information carefully to make sure it is all correct. After the identifying information will be a list of all the inquiries you or others have made into your credit history. A list of inquiries include both local, meaning inquiries within Canada, as well as any foreign credit inquiries. Some examples of these are insurance companies. Many insurance companies set their premiums according to credit score. Better score means lower monthly premiums. Car dealers. If you go car shopping, a dealer may look at your credit to see if you qualify for a loan to buy a vehicle, even if you don't buy the vehicle. Though it seems obvious that you aren't going to buy the Honda and the Toyota and the Ford that you took out for test drives, on your credit report, it looks like you are trying to buy 3 new vehicles. Always be sure to read the small print. Sometimes a credit check will be included when you sign the waiver to test drive a vehicle. Service providers. A cell phone or internet provider will examine your credit history to determine if you'll be a responsible customer. It is also good to note that although a cell phone is not technically considered a loan product, cell phone service providers do report to credit bureaus, so it is very important to pay your cell phone bills on time. Landlords. A landlord will use your credit to gauge how likely you are to pay your rent on time. Your credit history may make the difference between whether or not you get to rent that house or apartment you wish to rent. Pre-approved credit cards. Have you ever received a letter or an email saying that you've been pre-approved for a credit card or a higher credit limit? The company will have done a credit check even if you never asked for it. In this case, they will have done what is called a soft credit check, which we will be talking about in the next slide. Account openings. When you open a new bank account, the financial institution will check your credit history to make sure you are not a fraud risk. And finally, employment. Not all employers check your credit history, but some will, particularly for jobs that require a high level of trust. Whether you are aware of it or not, your credit history impacts a lot of areas in your life. So as mentioned, there are two types of credit checks known as hard and soft. A hard credit pull is done when you are applying for credit, such as a loan, a mortgage, or a credit card. A soft credit pull is done when you are not applying for credit. Soft inquiries, such as a landlord checking to make sure you pay your bills on time, or a credit card company reviewing your history to pre-approve you, these will not negatively impact your credit score. Because hard pulls are an indication that you are seeking new credit, too many hard inquiries in a short period of time can sometimes affect your credit score. The reason it may affect your credit score is that an individual who is active in seeking credit is considered a credit seeker. Credit seekers are considered riskier since they may be in more serious need of credit, and statistically speaking, credit seekers have a higher rate of consumer proposal and bankruptcy. Next, your credit report will go into more information about your creditors or the people who have lent you money. This includes the name of the lender, the type of credit they offer you, the balance on your outstanding debts, the monthly payments due, the start and reporting dates for that debt. For instance, if you have a credit card with a department store, your credit report will show the name of that store, when you got the card, how much you're allowed to borrow on your store card, the total amount you owe on your card, if you've been paying it as agreed, and the last date this card reported to the credit agency. There are also what are called payment indicators, which are numbers assigned to your credit report based on how you pay your bills. You will see on the slide the numbers range from 1 to 9. 1 being the ideal indicator, as it means the account is being paid according to the terms of agreement you signed, and it is the best status you can have on your accounts. The numbers become more severe until reaching 9, which means bankruptcy. Based on the information we've talked about so far, the credit reporting agencies will assign you a credit score. Your credit score is a judgment about your financial health at a specific point in time and indicates the risk you represent for lenders compared to other consumers. What is interesting about credit scores is that they are ever changing based on how you handle your credit, and both credit reporting agencies, TransUnion and Equifax, have different formulas and scales they use for calculating your credit score. Meaning, your credit score won't be the same with TransUnion as it is with Equifax. Although we don't have the exact formula, we do have rough estimates that the score is made up as follows. 35% of your score is based on previous payment history. Current level of indebtedness is about 30% of your score. Length of credit history is about 15. Number and or frequency of new credit inquiries is about 10% of your score. And the types of credit you have makes up the remaining 10%. What's clear about these figures is that a large portion of your credit score is based upon your payment history, how well and how regularly you've paid your bills. It's also important to remember that your credit score changes over time as you make use of your credit, which is good news if you want to improve your credit. Canadian credit reporting agencies only collect information from creditors about consumers' financial experiences in Canada. So if you are new to Canada, you may not have a credit history here. However, some financial institutions are willing to recognize your earlier credit history outside of Canada if you ask them to. This may involve requesting a copy of your credit report from the credit reporting agencies in the other country. Remember, your financial institution is available to help you. Explain your situation to your local financial institution to determine your options. Now that we know what is included in your credit history, let's talk about options for building a good credit score. There is no single or fast way to build or improve your credit rating. It takes time, diligence, and responsible management of your finances. But here are some tips for improving your credit score. First, make sure you have a credit history. If you have never had any credit in your name, you won't have a score or history that a lender can use as information to gauge how responsible you are with money that is lent to you. One easy way to build your credit history is to get a low limit credit card. Secondly, always pay your bills on time. As we saw with the payment indicators, when a payment is made late, it gets reported to the credit reporting agencies. Third, try to pay your bills in full. If possible, to not only avoid a late payment, but to also avoid paying interest, always pay your balance in full. If you aren't able to do this, pay as much as you can, making sure at least to pay the required minimum amount shown on your statement. And lastly, keep your credit card applications to a minimum. Not only could the inquiries affect your credit score, but the amount of credit in your name does as well. Only apply for 1 or 2 credit cards and have a reasonable limit on the card. Remember, just because the credit card company gives you a $2,000 limit, it doesn't mean that's what you require. You can always call the company and ask to have the limit reduced. Now that we've talked about good ways to build credit, there are a few caution areas as well. A credit score challenger is a credit situation that is not ideal for building a good score. We've already mentioned being careful when shopping around for a new vehicle, and the same goes for cell phone and internet providers. If you're shopping for a new service provider, be careful about letting the companies that you aren't going to go with check your credit history, since these can be considered hard inquiries. Who has heard an advertisement like the following? Buy a new TV for just $25 a week. It sounds like a good deal, doesn't it? These types of deals are called lease to own, and it essentially means you are able to get the item even though you don't currently have the funds to purchase it. It seems like a good deal at first, but often the payments last longer than the reasonable life of the item being sold. For example, the TV may no longer work and you may still be making payments on it. Some contracts even allow the seller to take the item from you if you are late or miss a payment, and often the overall cost is at least twice the value of the item when you take into account the interest you are paying. After understanding that a lease to own deal includes paying a lot of interest, you may hear the following commercial, which seems like an even better deal. Leave today with a brand new TV and don't pay for 12 months. These are called buy now, pay later deals. Unfortunately, these two can be very bad for both your credit score and your bank account. If you don't have the money to purchase now, there's no saying you will 1 year later in order to make the payments. If you don't pay in full within the contract period, you pay the full amount of interest. So if you owe even $1 at the end of the term, you will have to pay full interest on the entirety of the money you've borrowed. And the interest is usually higher than 20%. These kinds of deals make it difficult to improve your credit because they may leave you with a large amount of interest owing. And your credit score is based in part on the amount of debt you have. You'll notice credit cards is the 4th credit score challenger. We are not saying that you should stay away from credit cards. We just want to caution you to look at the small print, especially when it comes to the interest rate. Store credit cards tend to have especially high interest rates, which can be expensive and nearly impossible to pay down if you don't pay off your credit card each month. Did you know that your financial institution cannot give you a copy of your credit report? While the financial institution's representatives can answer your direct questions, they are not able to give you a copy. If you want a copy of your credit report, you must request it through the two credit agencies, Equifax and TransUnion, which will supply them for free once a year. Some people like to make this a birthday tradition each year to ensure it is not forgotten. The credit report you receive for free does not include your credit score. You don't really need to know your credit score. However, if you would like to know, you will need to pay a small fee. Even without the score, getting your credit report is the only way to know if your report is accurate. You can ensure the information is accurate and that you have not become a victim of identity theft. As we mentioned at the beginning of the presentation, there can be mistakes on your credit report. Don't panic if you see an error on your report, but do report it. If something is inaccurate, contact your financial institution and the credit reporting agency immediately. We often get asked about using personal financial management service apps such as Credit Karma or Mint.com. Some of these services require users to provide their personal information for financial accounts and credit cards, which can present a few different legal and security issues. For example, when you sign an agreement with your financial institution, you must sign that you won't give your PIN number or your debit or credit card or online banking information to anyone else, including your spouse. This means if you give that information to someone else, you may not be reimbursed for funds that are lost through means of identity theft or fraud. It is always best to go directly to your financial institution for banking information and to the credit reporting agencies for your credit report information. If you are having trouble paying your bills, and this is a problem many people face, so no judgment, you may simply need to review your spending habits and make adjustments in your financial decision making. Access Credit Union has a page on our website with budgeting information and worksheets. We'll provide the website at the end of the presentation, should you wish to take a look. However, if your problems seem more serious than that, it may be time to ask for help. The best time to ask for help is as soon as you see you might run into trouble paying your bills. Letting your debts get out of hand can lead to unnecessary stress and financial disaster. Your first step should always be to talk to your financial institution. You should never be worried about approaching your financial institution for assistance or advice. Their representatives exist to help make sure your finances and they are invested in your success. On the screen, you will see a few resources. If you are interested in creating a budget, which is always the best defense and in being able to pay your bills in full and on time, make sure to visit the budgeting tools page on the Access Credit Union website. There are simple steps to creating a budget, worksheets, and a video to walk you through the process. The websites for TransUnion and Equifax are also included, so don't forget to request your credit report. Remember, the reports may be different from both agencies, so be sure to request a copy from both Equifax and TransUnion. Finally, I want to close by saying that it can be disappointing to discover your credit isn't as good as you'd like. Many of us depend on our credit rating to secure loans that we use to pay for the important things in our lives, our houses and cars and educations. Having bad credit may make you feel like these things are unattainable. Your credit is fixable and can, if you make good financial decisions, improve over time. It won't be a quick fix, but with patience and discipline, you can improve your credit. Thank you so much for taking the time to attend this webinar today. We hope you enjoyed it. I encourage you to reach out to your financial institution whenever you have questions, as they are all here to help.